All right, good afternoon, everyone. Have to record this video. Sorry, the prior video did not have any sound. So let's go ahead and get started once again here. So, all right. I think, I mean, I'll just start by saying, number one, if you think next week is going to be another bloodshed week, I think you're going to be in for a surprise. It's usually the late bears that gets trapped after a ugly red week candle. I hope that makes sense. Check out this weekly candle chart of this SPY over the last over, let's just say, a couple of periods. Okay, every time you get a big green, red, engulfing candle such as that one, it usually shoots right back up. All right, so I'm gonna say that next week we're gonna bounce, and I'm gonna give you the reasons why. But before that, let's talk about what happened this week. Okay, so we already knew from prior week. I told you guys that the SPY was looking very much like a diamond top. All right. We started this video or recorded the video on Friday of last week, and we said that we were at a bare minimum going to come back and retest this particular trend line. And in the market, you got to be an early bull or early bear to profit, right? Just don't be late, right? Just don't follow the herd and continue to think that things are going to go up or things are continue to go going down. Right now, we've had 3 straight red days on the market with no relief in sight, and this is where they're going to start trapping bears. Okay, so before I go into all that, what caused all of this? Well, number one, on Wednesday, the market was just getting ready for Powell's speech, right? And then Thursday, we heard from Powell, and that just created a bunch of volatility. And we saw more detrimental effects of Powell's speech yesterday. And he was actually willing to concede that the rates or the 10-year yields and the 30-year yields are acceptable to him. He didn't say all that, but it was almost like it was acceptable to him because it would actually bring down economic activity. And what's the number one economic activity that he wants to bring down? That's right, housing. He wants people to stop buying homes at 8% mortgage rates, right? So that's the thing right now. And that is going to be a dark cloud cover, right? Over this whole next week that we're headed into. But good news is that we have major earnings next week, 4 of them, right? Google, Microsoft, Meta, Amazon, that could save the market and actually give us a bounce. All right. I know on the charts right now, nothing looks great. I think, and if you follow that mindset that, hey, this looks really ugly, I'm going to buy more puts, you're in for a rude awakening. All right. So let's talk about the data next week. First off, Tuesday, S&P. Oh, by the way, no Fed speakers next week except Powell, but he's not talking about monetary policy. All right. So Feds and the FOMC speakers, they're all on blackout. All right. Tuesday, S&P Global PMI, followed by Google and Microsoft on Tuesday afternoon. Wednesday, Powell, he's going to speak at some event. Meta, earnings after hours. Thursday, jobless claims, GDP Q3. Real consumer spending, pending home sales, 10 a.m. Of course, Amazon's going to report on Thursday afternoon. And then Friday, PCE, 8:30 a.m., 8:30, and Michigan at 10 a.m. All right. So as we mentioned, as I alluded to at the beginning of the video, is that we let everyone know that a big drop was coming, right? I mean, when we went into the weekend last week, it was just gloomy. This whole Israel conflict, we're talking about drone attacks on U.S. bases now, more warships arriving in the Mediterranean Sea. We're talking about, Gaza Strip, the Israeli forces going into the Gaza Strip, and it's going to be a prolonged war. And then we heard from Joe Biden last night that it almost sounded to me like we are preparing for World War III. He alluded to World War II, and he's asking Congress for $107 billion of relief efforts, $60 billion to Ukraine, $10 billion or so to Israel. That, I don't want to get into it, but that's a lot of money. All right. And that is going to weigh heavily on the markets. All right. Just that kind of news. Right. So we talked about last week, we're going to retest this trend line at 428 minimum, 428, 427 minimum. Ladies and gentlemen, we closed today at 421.19. This looks not good, right? 3 straight red days, 3 black crows pattern. Nothing good about this, okay? And I'm going to tell you, we're going to start bouncing next week. Number one is that I'm looking at this 4-hour chart, and yes, it's bloody. It's been bloody, all right, for sure. Double top, on October 12th, right at the 438 level. And okay, another 1%, 1.23% down day for the index, all right, for S&P 500. Remember this 417 area back in May, all right? And this is the breakout area, all right? I'm expecting that Monday, Tuesday, we're going to see more blood down to 417. And I think, given the scope of things right now, that I do think that Google, Microsoft, Amazon, and Meta will save the market next week, all right? So I'm actually putting two targets next week. We're going to see 417. And by the way, there's pretty good demand area here at 417. All right. We're going to see 417 and we're going to jump right back to 426, which is the top of this week. Okay. Which was the top of today. Sorry. Okay. The top of this week was 438. All right. We're going to rip right back into 426. I'm not saying that we're going to go on an uptrend. I am saying there's going to be a relief rally. All right. And they're going to catch some late bears at the 417 below 420 levels. All right. So 417 is my target for Monday and Tuesday, and then by the end of the week, we should end up at 426. Going over to the Qs, all right? Going over to Qs, I think we're going to hit 350. 350 is a major psychological area. We said that at the beginning on our video last Friday to you guys was that we're going to hit a minimum of 361, and we hit 354. We're going to go much lower. Don't worry, all right? 350. Possibly Monday and Tuesday, and then Google, Microsoft will announce on Tuesday. They both beat, and starting Wednesday, we're going to march back potentially towards this trend line here at 363. Okay, so I'm putting upside target or downside target of 350, but we're going to rip right back to 363, and we're going to retest at a minimum that 20 moving average was roughly about 362. Okay. Whenever your price starts to move too far away from the 20 moving average as it is right now, you're generally going to find yourself right back towards it. And right now, 20-day moving average 429. I'm not that ambitious on SPY. I'm just going to say back to 426, 427, which is a big spot, and you're going to have some supply zone there. All right. I do expect, ladies and gentlemen, that at a bare minimum, Microsoft, Google, and Amazon will beat on their earnings. They're expected. The expectation at this point is quite low. Okay. I do think there's more downside. Again, Monday, the momentum and the velocity of the downside right now is pretty strong, right? You're going to see a little bit more downside Monday, Tuesday, and then we should start bouncing probably Wednesday through Friday of next week. So that is what we're expecting next week, ladies and gentlemen. Hope you guys have a great weekend. And